Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500. We're seeing a lot of developments happen over the last few trading sessions, a lot of very weird things happening on the stock market right now, a lot of unprecedented developments. We saw the S&P 500 make a parabolic move here following the better than expected jobs report. So we're going to talk about this. We're going to talk about what this means for the stock market, what it means short term, intermediate term, and how we can potentially take advantage of this for a profit. Now, if you are new here, make sure to subscribe to the channel because we make these videos multiple times a week, and I'll be here helping you navigate through these crazy markets every step of the way. Now, if you have any comments, any questions or suggestions, make sure to leave them down below. I do go through and read all the comments. I think having an open-minded debate about all these developments is the best possible way to get down to the truth of what is actually going to be happening. And also, if you enjoy this video, make sure to smash the like button. It helps our channel out massively. It is really appreciated. All right, so let's first take a look at the short-term technical picture on the S&P 500, and I'm going to add some levels here. We're going to take a look at a few different price channels that are important to look at right now, some important levels. First of all, we obviously have this channel right here capturing all these reactions along the way. This is definitely a valid trend line that market participants are watching. Now, if we clone this trend line and add it to the bottom right here, you'll see it also acts as support, although we do have two little bear traps here. And you can see the power of a bear trap on this chart here. This one in March 2021 triggered this huge move up in the markets. And of course, more recently, we saw this quick bear trap trigger a parabolic move, a type of short squeeze here, especially when you add good economic news on top of that. That can really create some powerful moves up. But the fact that we're starting to get multiple bear traps through these levels is a little bit worrying. This is not a price channel that has as much weighting as it did after these reactions right there. And that's where I want to show you guys another channel here that's perhaps a lot more accurate right now for the price action that we're getting. If you take this line capturing these four reactions right there, you clone it and take it to the top capturing these three reactions, you get a very well-defined price channel. This is not coincidence. This is technical analysis. The markets love symmetry. If we had seen this trend line back here, we would have identified that as a nice level of support and not a breakdown, which was indicated by the previous price channel. But that's obviously part of trading. You need to adapt along the way as the charts change. Now we're coming into resistance, and I do think that market participants are watching this level. The S&P 500 seems to be attracted to that level. It's coming in very rapidly towards that resistance. And I do think that we're going to get a correction here. The markets are overextended in the short term, right? Look at this RSI reading. This is a momentum indicator that can give you oversold and overextended readings. You can see where it is right now at around 79 on the RSI here. That's an extremely overextended reading. If we zoom out, you can see this level has only been hit a handful of times in 2020. If we zoom out even further, you can see it's a very, very rare level, right? It never gets hit. Now, we had one reading back in June here during this blow off top, not at the very top, but during the blow off top. And same thing back here in August, 26th of August, right before that September high. So, this does not predict a correction, right? It does not predict a correction. You shouldn't take short positions because of that, because of an RSI reading like this, but you definitely shouldn't be stepping in to buy anything right here. This is overextended, and it does increase the odds of seeing a correction in the short term. Now you can see here, 26th of August, the markets continued higher for an additional 3% throughout the following week before eventually topping. So you need to keep that in mind. We could still hit that resistance level before seeing any type of strong reaction. So I do think we're going to get a short-term correction. But again, the aim of this channel is not to predict the short-term moves, right? I don't care about that. What we try and capture are the longer-term trends. If we jump to our favorite chart that we discuss pretty much on every single video, this is what swing traders need to pay attention to. If you're day trading, obviously this has absolutely no meaning, but look at this intermediate term picture. This is just an incredibly strong market technically, right? We had a long-term breakout here, backtest, resumption. Now we expected a little bit more volatility before having a melt up move, but at the end of the day, this channel was respected all the way through. You can see this post from Twitter back in February 2021. We were using the exact same channel as the markets were approaching that resistance. We were talking about a short-term healthy pullback, but most importantly, that a breakout above that level, above this level, would increase the likelihood of a melt up type of move. And when I mean melt up, I don't mean just a 5% move that we've just gotten, but a much larger trend up. I'm going to discuss this again a little bit later in the video, but I do think that there's going to be opportunities to take advantage of this type of move. Do not FOMO into this move that we're getting right now. But this is just to show you how simple technical analysis can be. This is a bull market trend line, and we've been looking at it every day since February. And look how many reactions we've had off this trend line since February. In fact, this was just such a beautiful buying opportunity right here. If you had this bull market trend line and you are following these moves with us, this breakout backtest of major support here, this was a beautiful buy entry when everyone was panicking on this move down. It was the ideal moment to be buying the dip. This was a post on gameoftrades.net highlighting some targets and a stop loss here below that bull market trend line here. Because you know that if price comes back down below this channel here, it's starting to look like a false breakout scenario and you're looking for a lot more downside. But that's not what happened. We got a bounce. A good example of this is during the .com bubble right here. This is something I've shown many times on this channel. You had a beautiful line of resistance right there, capturing that bull market and just a nice price channel. This is just a quick sketch, but just to show you this breakout here, that signaled the real beginning of the melt up move in the NASDAQ 100. But between that breakout and the actual top, there was a year worth of trading. A lot can happen between that breakout and the ultimate top. So a general bullish price action, but in the short term, the market internals, so the market breadth that we talked about in the last couple of videos, remains extremely weak. Now, this is a chart from our website on gameoftrades.net where we posted this end of week stock market wrap for our members, and this is one of the charts that was highlighted in that post, and it talks about the market breadth that we've been looking at for a while, where we're seeing the markets trading at all-time highs, even seeing a melt up move at all-time highs, but the market breadth is just not following. So this is a very strange technical picture. I've never seen this much divergence between price and the market breadth. And so that is a very concerning look for me. Now, again, it doesn't guarantee that we're going to see a correction, but if you combine that with the overextended RSI reading, the market being near price channel resistance, it's probably not a good idea to be stepping in to the markets right now. You can see a handful of examples here throughout the past couple of years where the markets went higher, but the breadth went lower. It often leads to a correction, not necessarily a massive correction, but a correction nonetheless. Now, if we take a look at what sectors are actually pulling the markets down, again, transportation ETF is weak right now. So while we had the transportation ETF confirm the bull run all the way through this period, right up until March 2021, now that's not the case. So, the transportation sector is typically seen as a leading economic indicator. So weak transportation sector suggests the economy may not be as strong as we think it is. The sector that's really outperforming right now is the NASDAQ 100, right? We have this chart of the NASDAQ 100 divided by the S&P 500. So the relative performance between tech and the broad market. And you can see this is quite a hopeful chart right there. We had a very poor technical picture in this area here where we were starting to break down below the significant line of support, but that created a bear trap scenario and we had an impulsive move back above this support level. So while this ratio is trading at the same level that we were at back in July 2020, a year ago, the technical picture right now is a lot stronger than it was back here. I would not want to be buying tech right here, but right now it's a lot more attractive. If we zoom out here, you can see this ratio between the tech and the broad market just always seems to be going up. So I think it's fair to assume that following this period of consolidation and a bear trap and an impulsive move, that could be a powerful signal that this ratio may continue going up. Now in the short term, obviously this is a very strong move, might be a little bit overextended. We obviously have some resistance around these levels that might trigger a small pullback in the tech sector and potentially a long opportunity. But if we really want to find out where this ratio is going to be going, we have to take a look at interest rates. So this is the 10-year yield, and you can see it's coming down into this line of support, trend line support. Now, if we get a bounce off this level here and perhaps come back in to test this line of resistance right there. So if we see this type of move up, that could trigger a small correction in tech. But ultimately, I do think that we're going to break down through this level. I do think that we're going to continue to see yields trending lower. And I do have specific reasons for that. We're seeing a technical breakout on treasury bonds. We're seeing gold have a very hard time recently. And gold is a very powerful indicator of where yields may be going next. So this is all pointing towards lower yields. So in that type of environment, it makes sense to see tech lead the rally and for the market breadth to be so weak. Because if the only sector that's going up is the technology sector, the market breadth is not going to be very strong. In fact, I went back on this chart to see when we had this type of breadth with the market going up like it is right now. And the last time that happened was actually back in the dot-com bubble. You can see these moves here. The market is going up, 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 but the market breadth back in 1999 was extremely low. You had less than 50% of stocks trading above their 50-day moving average. That's an incredibly weak technical picture, but yet the markets were going up because the tech sector was on fire. So in summary, markets are overextended short term. Heading into resistance here, we might see a correction. If we do see a correction back down to support, I do believe this is a good buying opportunity, especially if we see this ratio between tech and the S&P 500 come back a little bit down. If that happens, that would just be a perfect setup to get in on the tech sector before potentially a major move up. Some of the risks that we were seeing in the previous videos may be starting to dissipate. I just want to show you guys one more chart so that you guys have the complete technical picture here. This is the dollar, the US dollar, the DXY. Let's put an 8-hour chart on here. And the reason I'm showing you the DXY is because it's such a powerful indicator for assets in general. If you have a falling dollar, it is going to push stocks higher. Now look at what's happening here. We had this massive move up in the dollar. So that was a pretty bullish development. It looked like it was breaking out and it increased the fear in the markets massively just because of that huge momentum. But you can see what's happening now. We just had a slow grind up to resistance. We got rejected off resistance. We now have divergence between the RSI that's going down and the price that's going up. That's suggesting that there might be a reversal soon. Look at this. We had the same setup back here. Price making a higher high, testing resistance, RSI making a lower high, and you get a downtrend. I think if we confirm this breakdown here, we'll get a major move down in the dollar. And if we get a major move down in the dollar and that yields are going down, economic numbers are strong, where do you think that investors are going to go? They're going to go straight to the tech sector. That's what the charts are pointing to right now. Now it can change if we see a breakout above here. That's starting to look a little bit more dangerous for equities, but this move But what we're getting right now on the dollar is not particularly bearish. It was a scary first move, but now all of a sudden, it's looking a lot more like there might be downside on DXY here. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash the like button and subscribe if you haven't already. Now, in the meantime, good luck on your trading and see you next time. Now, go and check out our website at gameoftrades.net if you want to follow the markets with us throughout the week, whether that's the stock market, cryptocurrencies, precious metals. We cover precious metals a lot. There's going to be a lot of big opportunities in gold and silver. So make sure to go and test out our service on gameoftrades.net.